Thanks for clicking. Core Development Group, the company that made nationwide headlines in 2021 when it announced it would be buying up 4,000 single-family homes to renovate and turn into rentals, is putting a number of those properties up for sale. The news will no doubt be welcomed by critics, which had strongly rebuked Core's 2021 announcement, with some calling the move crisis profiteering. But the real estate market and the cost of borrowing has changed dramatically since June of 2021, and Core is putting several of its acquisitions up for sale. Acquisitions which, as we'll see, are largely unfinished. So what I want to do today is go over a brief history of Core's billion-dollar venture, take a look at the news that they would be selling their largely unfinished properties, look at why they might be selling their properties,
I need money,
and then discuss some of the implications for Canada's real estate market as a whole. Canada's inflation data for the month of September is set to be out on Wednesday, which will obviously have a big impact on the Bank of Canada's rate announcement coming next week. We'll obviously have updates out on both on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this billion-dollar venture. As mentioned, Core made major headlines across the country in June of 2021 when they announced they would be buying up 4,000 single-family homes, with the intention of turning them into rentals. While the company argued that it was creating a social good by creating more rentals, critics argued that it was using its financial muscle to buy up units, jack up rents, and remove potential homes from a dwindling housing supply. In June of this year, we had a brief update on this channel as the company had failed to buy those 4,000 homes. In fact, it was far closer to purchasing only 81 homes as of June of this year. Fast forward to October of this year, and the Toronto Star is reporting that the company is putting a number of properties up for sale. Properties which were purchased in the latter half of 2021. One home in London, Ontario was purchased in September of 2021 for $450,000. The home is now listed for $549,000 and is definitely not in move-in condition. London's average house prices are down 1.9% since this point in time last year, and Core is trying to sell this home for a $100,000 profit in a year characterized by falling prices, and the home is unfinished.
How f***ed up are you?
Indeed, and the property isn't selling. It's been on the market now for 73 days. In another property in Peterborough, where prices have fallen by 4%, Core purchased it in January for $578,000 and is now trying to offload the property for $625,000 at a time, again, with falling prices, and the home remains largely unfinished. The listing advises that the home doesn't even have a kitchen or a bathroom. So, despite the plan to purchase 4,000 homes, and as of the Star's most recent accounting, only hitting 110 properties in Ontario, Core is selling off a number of its properties at seemingly ridiculous prices given the current market. And when the Star reached out to Core to ask why they were selling, the company wouldn't say why, only saying that the company evaluates its portfolio to ensure that it is efficient in providing high-quality homes to its tenants. Occasionally, Avenue, which is Core, decides to sell homes based on a number of factors, including but not limited to location, size of property, and renovations required. So while Core isn't stating explicitly why they are selling some of their real estate holdings, in general, real estate investors do not buy at the top and sell at the bottom, or sell on the way down.
Now you tell me.
And they definitely don't sell unfinished. And the selling of these properties make even less sense when you consider that rent prices have been rising in London over the past year. In fact, London has seen some of the highest rent increases in Canada. And it's not just London. Rent prices are up all across the board in Canada. So for a company whose main plan was to buy up single-family homes, renovate, and rent, selling at the bottom of the market, maybe not the bottom, but selling on the way down, when rent prices are increasing, this doesn't make any sense. So the confusing moves by Core Development is definitely raising questions as to whether or not the company is joining the majority of Canadians in starting to feel the pinch of higher borrowing costs. Investors in general don't use their own money, don't use their cash on hand to buy up properties. They get mortgages. And those mortgages, in general, are not 5-year fixed. They get variable rate mortgages, which allows them for flexibility if they have to sell the property. They can do so, and the penalty is only 3 months' interest. They also usually use variable rates, as if they are not overextended and leveraged up, they have the cash on hand that they can take the swings if prime ebbs and flows, if prime rises and falls. So while there isn't any definitive news out there that Core is having financial problems or that they've been affected by the rising cost of borrowing, Selling off rental properties unfinished in a down market doesn't make any sense. And it does lead to questions that maybe the Bank of Canada's raising of interest rates, the 300 basis point rise in the cost of borrowing over the past year, is causing some issues for the investor. As with investors taking variable rate mortgages, all things being equal, but as with investors taking variable rate mortgages, they too have been hit fairly hard by the rising the cost of borrowing.
Camp and hold down 3 jobs.
And this could very well be a sign of things to come, with investors at the height of Canada's real estate boom constituting nearly 20% of the market. It's always been a concern, even during the boom, that when interest rates did go up, when that cost of borrowing made holding these rental properties, holding these investments even more expensive, that we would start to see a flood of new properties hit the market. When we get a flood of supply without any corresponding increase in demand, prices move downward. And Core is a big company. If a company of that size is selling off its assets, if holding those assets no longer makes sense for a company as large as Core that can look at making a $1 billion investment into the market, then surely those mom and pop investors, those investors that have 5, 10 properties, mom and pop investors, it's very possible that holding those assets may no longer make sense to them as well. And we very well could see those investors that sell their properties on the market as well, putting even more downward pressure on Canada's real estate prices. We will get a much better idea as to how much pressure will be put on these investors very soon when that inflation rate comes out on Wednesday and when we get that Bank of Canada announcement the following week. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.